What I believe will happen is, the stock market or the bond market, one or the other, or perhaps even both, will quote unquote break.
Today I interview famed investor and author of The Big Print, Larry Lepard,
One of the things I love about it, I mean, I made my career as a professional investor trying to find companies and bet on companies.
about the real reason Bitcoin is going much higher in 2025.
So I could see us, ripping into a $1,000 Bitcoin price at the end of this year. And
Watch today's whole video. What are common mistakes you see younger investors making today? As Larry shares investing alpha that could literally change your life.
and that's why those of us who really understand it deeply, just are pounding the table that you've got to buy some of this because it's going to be so much higher.
Click the like button right now to support me. And let's start, Larry, with your background.
Yeah, so most people know this, but I've spent most of my career as a professional investor in fund management, really in the venture capital world up until the mid to late 2000 period. And then I moved over into more public equities. And then when the GFC hit, I became kind of a sound money person, and pivoted into gold and silver mining stocks. And then as Bitcoin became more successful and I found it and believed in it, I've pivoted even further into being heavily into Bitcoin. So I still carry both funds. Involved in a Bitcoin fund, and I'm involved in a gold and silver fund, gold and silver mining fund. So the background is really I've been a sound money advocate for most of my career, and the problem of fiat debasement that Bitcoin solves is something I've thought about for a long time.
So, when you first heard about Bitcoin, did you understand it immediately?
Oh gosh, no, not at all. So when I first heard about it, I'll tell you my reaction to it. It was really interesting. My first reaction is, well, I understood the concept of separating money and state and having money on the internet and all that stuff. And I'd watched eCash and DigiCash and Hashcash and all these other attempts. And so I did the thing that so many people do, which is I use kind of a mental heuristic. I said, oh yeah, that's really nice, money on the internet, but we've tried that, it didn't work. Because as we all kind of know, there were a bunch of failed experiments, and of course, each of those experiments figured out maybe another piece of the puzzle. And then whether it was Satoshi or a group of Satoshis, they all kind of eventually got it right with Bitcoin. So when I first heard of it in '09 or 10, I was extremely skeptical, and just thought, well, they can't do that. It hasn't worked so far. And then when it started working and the price went from, $20 to $100 and so forth, I thought, well, hang on a second, this is real, and it kept working, and there were no problems, no apparent problems with it. And so as time went by, I got more and more interested in it, dug into it, understood what it was, and then I made my first purchases, I think in 2013. So I was pretty late to the party, but the whole notion of, going to a cafe and giving somebody some money and getting a paper wallet, that seemed kind of uncomfortable to me. And I was almost a Mt. Gox customer, and they failed right before I sent them the money. And then, as you'll recall, Coinbase came public in 2013. And so now we had a venture capital backed US company where you could buy Bitcoin. And that's what I did. I went there and I bought some. So,
Um, and there's probably no better person to ask than you on this, but why is Bitcoin going up now?
well, a lot of reasons. I mean, the biggest picture, I think, is just continual monetary debasement. That's kind of, the book describes this as kind of just baked in the cake. This is Lynn's model, and it's been my model as well, that when you're expanding debt and you're expanding the monetary base more quickly than you're expanding GDP, that's an inflationary thing. And Bitcoin is fixed algorithmically to 21 million coins, so it will not expand as all these other monetary base expand. So in dollar terms, Bitcoin, I'm with Saylor. Bitcoin is going much, much higher. It's going to multiple millions of dollars per coin over, the next 10 to 15 years. So um, I'd say but to point to the biggest cause is because the fiat system and the Keynesian model really just kind of requires continued inflation. And there was a time when that was, calmer and people weren't paying attention to it, like the 80s, after we had the gold rush in the 70s, and then Volcker got things under control. And, most people weren't paying attention to sound money during the 80s. But, it's gotten steadily worse, this issue of government spending and debt. And I think now we're kind of at the point where the pot is really on the boil. It's happening very quickly now. And as we all know, we hit a record high price today, 109, and I see us going to 140 or 150 this year pretty easily, and potentially higher. But I'm very comfortable predicting that.
And show the book if you would. I have mine
Oh,
ordered.
sure. Yeah, happy to. So the
Link
book,
down below.
yeah, what's that? Yeah, the book is available on Amazon. It's hardcover, paperback, EPUB, Kindle, and audiobook. So yeah, anyone wants to pick it up there, you can. I'm also going to be at Las Vegas and at Prague, and have tables to do book signings at both those. You can purchase it there. But sadly, I didn't get thousands of books. I got hundreds of books. So once I'm out, I'm out.
I'm getting mine signed, so Altcoin Daily audience, you got to line up behind me.
There you
But
go.
but uh you say you're very comfortable with Bitcoin will hit 140 by the end
Yeah.
of the year. How can you say that when we have trade wars, uncertainty? Seems like it's never been this uncertain.
Yeah, well, I think the trade wars actually kind of feed into all of this. I think all of the economic problems that are bubbling up all over the place, including the Japan bond market, which appears to be kind of in a state of falling apart. I think all of these feed Bitcoin. The Bitcoin used to be the price used to be correlated with the S&P, or I'm sorry, with the triple Qs and the Nasdaq because it was kind of viewed as a risk-on asset. I think we're in the process of seeing that change. I think it's now starting to trade more like digital gold. And what's going on is these two assets are really beginning to realize that the government is in a trap, that they just cannot stop printing money to keep the system running. And once that becomes widely known and understood, we'll have kind of what I call and describe in the book as a mass scale Gresham's Law-like event where people want to get out of other assets, particularly bonds that are denominated in a fiat currency, and get into the two currencies that the government can't print, which are gold and Bitcoin. And obviously I prefer Bitcoin to gold because it's got an adoption cycle and it's got so many advantages over gold. But I don't shit on gold. Gold's got merit. It got us all the way to 2008, and it's not going to disappear overnight. It'll still do a job of protecting some of your purchasing power, but Bitcoin's a much better choice.
For the folks at home, what is Gresham's law?
Oh, sure. So Gresham's law, Sir Thomas Gresham was a guy who was an advisor to Queen Elizabeth back in the 1500s. And what he said is, and so the issue of monetary debasement, this isn't new, right? This has been around for thousands of years. People have cheated on the money. The Romans clipped coins and sovereigns clipped coins and everybody, the denarius, which is the Roman form of coin, was started off all silver. By the end, it was all iron. Um, and Gresham's law says that people can figure out when the money is going bad, i.e., if that kind of debasement is taking place, the average human being will look at the money that they know is losing value, in other words, where prices are going up in that money, and say, and then they'll look at another form of money maybe that's not losing value, let's say an ounce of gold, and the price of something in an ounce of gold won't be moving at all, and they'll say, huh, I get it. This one form of money is losing value, this other form of money is holding value. I'm going to spend the one that's losing value because why wait around for it to lose more value? And I'm going to hold on to the one that holds its value, which is gold. And so the law itself is written down as good money drives, or bad money drives out good. And what that means is that if the money is going, if one form, and there are always a couple forms of money going around in any economy, if one form of money is going bad, i.e., being debased, that will cause people to hoard the good money and spend the bad money. So, and at the extreme, like in Weimar Germany in 1921 through 23, they literally, throw out, the bad money and use wheelbarrows with which, because the printing presses were running so hot to purchase things, and they hang on to the good money, which in that time was gold or the dollar or the British pound.
What are one or two of the most important macro indicators to look at now? And I'm not talking about money printing. I'm talking about macro indicators that would lead to that.
Yeah, so it's a great question. I think probably the most important macro indicator, well, there are four or five of them, but the price of gold. Notice it's hitting all-time record highs. A lot of people think, oh, it's just a bubble, it's going to come back down. No, it's not. It's going to go to 4,000, 5,000, ultimately 10,000 plus. The price of Bitcoin, same story. A few years ago it was 15,000, now it's at 109. I think it's going to 200, 400, 600 over time. The bond market, the long bond market, which tells you how much people trust that government bonds will hold their purchasing power. And what you're seeing there is in Japan, the 40-year bond is hitting record levels. In the United States, the 20-year bond just crossed the 5% mark, which is a big deal. And then probably finally, I would say, the stock market. The stock market's a little bit trickier to figure out, but It gives you a sense of how much liquidity is sloshing around in the system. And what I think is going to happen here is I think ultimately the stock market is going to start to go down. The U.S. bond market is already in the process of going down. Rates are going to go higher. And the U.S. government really cannot handle higher interest rates. I mean, we are currently spending about $1.2 trillion a year on interest in the U.S. It's bigger than the defense budget. It's approaching the Social Security budget. And if interest rates keep going up, the government's going to, go bankrupt. I mean, they already are bankrupt, but it's going to be worse and obvious. And so what I think will happen is the government will be forced into what I call yield curve control, which is another round of quantitative easing, which is really just complicated words for saying they're going to hit the button on the computer that says print more money. And that's fine. It'll keep the system going. But that's what they did in the COVID example when they grew money supply 40% in 2 years. And that's why everybody went, I don't know about you, but when I go to the grocery store, I get horrified. I mean, the cost of groceries is just insane. I mean, it went up so much in the last 3, 4 years. It's been horrible. And so, and so I think we've got more of that in our future, sadly.
So as that happens, and like you said, Bitcoin's at all-time high, stock market at all-time high, housing market near highs,
Yeah.
everything. Is this an everything bubble? And do we need to see a crash before Bitcoin can rise from the ashes?
That's a great question, and I don't know the answer. I mean, yes, it's an everything bubble. So the reason it's a bubble and the reason we got to this point, and it's useful to discuss this, is that they kept interest rates at zero from 2008 to 2015. Remember, they had ZIRP, which stands for zero interest rate policy. They also kept them at zero from 2019 to 2022. And that created an enormous, enormous bubble because money was free. And so people borrowed and then they used it to lever up and buy yielding assets. Okay. Um, so the question of do we need it to burst for Bitcoin to go to new highs? It's unclear. I mean, if the Fed just pivots and starts printing money, no. But what I see is that we've got a Fed chairman who wants to be Paul Volcker, who's determined to correct the excesses of the COVID print. And so he's being very tough about not dropping rates quickly. And my sense is that what that's going to lead to is that something's going to break. I mean, we know the third Fed mandate is if something breaks, they will print money. We saw it in '08, we saw it in COVID. And so what I believe will happen is, the stock market or the bond market, one or the other, or perhaps even both, will quote unquote break. And at that point in time, the Fed will suddenly pivot and say, well, we're trying to fight inflation, but we can't let the system fall apart. And therefore, we need to reinstitute quantitative easing. We need to, use yield curve control to cap the interest rates on the bond market. And we stand ready to buy whatever bonds are being sold by the market. I think that's what we have in our future. Now, what's really tough, also, is just we don't know when that's going to happen. It could happen tomorrow. I mean, I can't see it happening taking more than 2 years, but I give it could happen. They could drag this out for a while. It could be 18 months or so before it happens. But I think what we do know because of the math is that it has to happen because without more money in the system, you don't have the capital to pay the interest on the growing bond balances. So it's really kind of a problem.
I'm a millennial, meaning I
Yeah.
was in high school during the '08 housing crash. Um,
Right.
and I've never really, and my whole generation has never really known a US market or global market that doesn't print its way out of it.
Correct.
And I saw like a lot of people at this last really big dip where the VIX, went crazy. People were saying, "Oh, there's this buy the dip mentality. There's a whole generation in the market now that doesn't know that we're going much lower." And of course, now Bitcoin's back at all-time highs. Is there any scenario where they don't print their way out of it?
I don't think so because I think eventually we'd enter the Great Depression, and I think that politicians presented with the ATMs aren't going to work and we're going to the Depression versus we are going to print to keep things running. I think they'll choose the print every time. But let me just caution all who are listening to this. They could create a lot of pain before they do the big print. I mean, they could, they know that they're on the knife's edge of currency failure. And so they're going to possibly try and delay the big print as long as possible. And, what would that look like? Well, I think if you go back and you study March of 2020, that's a good example of what it might look like. I mean, in that period when COVID hit, stock market went down 30%, gold went down 30%, Bitcoin went down 40 or 50%. Everything got hit because it was a trade correlation of one, and liquidity was just way too scarce. And then, of course, what happened is on a Monday morning, Jerome Powell came in and announced, a laundry list of programs, and said he's basically prepared to buy an unlimited amount of bonds, whatever it took to stabilize the financial markets. And of course, everything turned around very quickly. The stock market went back up, gold went back up, Bitcoin went back up, etc. So, but what that told me is that at some point in time, they were looking at the entire economy melting down. And you were younger, you weren't there, but I remember it quite well. I mean, in 2008, when that one happened, same idea, same event, although it was focused on housing and the banks. The not Jerome Powell, Hank Paulson, went down to Washington, D.C. and was literally, on his knees begging to Nancy Pelosi and said, if you don't give us $700 billion for TARP, the ATMs aren't going to work tomorrow. And so Congress passed a bill, to give them $700 billion for TARP, which of course the Federal Reserve printed to do. So I think that politicians backed against the wall, as bad as the inflation associated with the printing is, they'll view it as, well, we'll deal with that later, and I've got to keep the system running. That's so I think to answer your question, no, I don't think they'll let the system collapse. I mean, if they do, Bitcoin, gold, all these things aren't going to matter. You're going to want to have food and lead, I mean,
And
because
guns.
it'd be an ugly situation, I think.
What are common mistakes you see younger investors making today?
Probably the most common one is the belief that the stock market can only go one way, and that's up. I've lived through a lot of cycles since the 70s, and we a lot of people have been conditioned to just believe that the market is safe. The market goes up. You always buy the dip. And frankly, every time since 2008, it's been the right thing to do, but or 2009. But remember, when the dot-com bubble burst in 2000, when the housing bubble burst in 2008, stock market went down 50% top to bottom. And tech stocks in the bubble, the housing or the housing stocks went down 80 or 90%, and dot-com stocks went down 80%, and Nasdaq went down 80% in 2000. So I think that the average young person doesn't really appreciate what a bear market is because the printing has always solved that problem. And that may be continue to be true, but I would just caution people that, if you look at the market today on historical metrics, and John Hussman is an analyst who does some fabulous work on this area. I mean, the stock market today is not even close to being cheap. In fact, it's extremely overvalued. So I think there's a possibility this next big print comes with a twist. And that twist is that, okay, things get troublesome. The bond market breaks, the stock market breaks, the Fed comes in, they print a ton of money. It certainly benefits gold. It certainly benefits Bitcoin because they represent forms of money that can't be printed. But it doesn't necessarily have to benefit stocks. I think you could see a situation where stocks don't go up as much as everyone's hoping, or they go sideways. I mean, and the reason for that is I think that what we'll be talking about when they do that print will be very disruptive to the economy, and it'll cause a lot of inflation. And if you look at the stock market, the last big period of inflation in the United States was in the 70s. And I remember it, I was a teenager. And inflation was just raging, and everybody thought it was an enormous problem. And the stock market went nowhere for 10 years. It was a terrible place to invest. The bond market did even worse. And the only things that made money were gold and silver and oil because they were all a hedge against inflation. And so if what we have next is an inflationary event based on the bond market failing and the government has to print money, I would say Bitcoin and gold are going to work fine. Stock market, not so sure. And I think I see a lot of people, I mean, a lot of people, including people my age, a lot of boomers who have all their savings and all their wealth in the stock market. And to be fair, it's done great for them. Especially if you own the Mag 7. I mean, good Lord, you've had enormous rates of return. But, everything in markets ultimately, I think, reverts to the mean to some degree. So, there'll be money printing, and it may not, I don't think stocks are a bad place to be. I just don't think they're as good as everyone thinks because I think everyone's looking at the last, from '08 to present and saying, well, we're going to have that's normal. And in my view, if you look over 50 years, that's not normal. That's abnormal. So,
If Bitcoin only goes to 140 this cycle, to me, that
mm.
would suggest that maybe the 4 year cycle is done. Because if it's at 140, maybe it corrects back down to 90, but that's just, you go 5 steps forward, 3 steps back, whatever it is.
I think that's very right. I think you're very smart to say that. I mean, it could go to 200. I don't, as we know, each turnaround or each correction has been smaller. And I do think the 4 year cycle is becoming less important. I mean, we're now at the stage where 95% of the coins have been mined. And so, cutting the rate of mining, of supply in half, it's just not that big a number relative to the total base anymore. When you went from 50 coins to 25 coins, and that was huge, or 25 to 12 and a half, that was huge. I mean, now we're, going from 3.125 or whatever to, one half of that. So, yeah, I think the 4-year cycle is going to become less important. And I don't know what the peak of this cycle is. I mean, I've seen, Samson thinks it's a million. I've seen smart guys who think it's two or 300,000. That wouldn't surprise me. I think 140 is in the bag. I think that's a no-brainer. And then, then I think probably, and what'll cause that is the same thing it's always caused. You see a little bit of it right now, actually, with all these treasury companies taking off and trading nuts. You see a little bit of kind of the animal spirits and the frenzy. I mean, this reminds me a little bit of 2000. Do you know what I mean? And so I could see us, ripping into a $200,000 Bitcoin price at the end of this year, and Metaplanet and Sailor's Company, and I mean they've all gone up a ton, and everybody's feeling great and thinks it's going to 400. And what'll happen is always does is a lot of speculators will enter and they'll get levered and they'll chase it and everything else, and then suddenly there'll be no more sources of new demand. It'll turn around and it'll wipe those people out. It'll come back from 200 down to 130 or something. I'm not uncomfortable buying it here at 109 because I don't think it'd go much below this on a retracement. But if it were at 200 or 250, I'd probably hold off on my purchases. I think you get a chance to buy it cheaper on the next downswing.
Bitcoin in 5 years by 2030.
Yeah, so I use the power law model as kind of my base case. And I think, and the interesting thing about that model is it kind of shows what the fair market value price ought to be. And then it also shows you what the potential upside is. I've actually got this chart in my book. It's nicely laid out, but I think, let me just see if I can find it here.
Please take your time.
Yeah, it's the bottom line is I think, I think we're easily in 5 years time, we're easily at kind of 300, 500, something like that. But if you could get a swing where it just goes much, much higher than that. Do you know what I mean? I mean, it's entirely possible that we have oh, here we go. Yeah, it's on page 293 for anyone following along with me. So the 5-year power line model shows the trend line in 5 years, and this was from last year, so maybe you'd have to move it up a little bit from this. 5 years would be at 326,000. But this is interesting. One standard deviation up is 667,000. Two standard deviations up is 1,853,000. And by the way, Bitcoin has traded at two standard deviations above its trend line mean, many times. So not many times, but in each cycle. I think there've been five of them. And then one standard deviation down is 180. So, in 5 years, I mean, I could easily see it be $500,000. In 10 years, the trend line is a million. So that would a million one actually. So that and the one standard deviation up is 2.2 and two is 6 million. Now, typically if you look at it historically and two standard deviations above the trend line, it doesn't generally stay there for very long. It spikes up as we all know and then it corrects. So, but in 20 years, the trend line is 7 million. So, I mean, these are some big numbers, and that's what happens when you compound something out over, year after year. I mean, it is a scarce asset, and there is a large amount of fiat money that's going to move into it as they become aware of how scarce it really is. And, that's, I'm sure you're familiar, it's in the book too, Jesse Meyer's chart on, the just the total available market. There are $9 trillion of fiat things out there if you include real estate, 900 trillion. What's Bitcoin, 2.1 trillion today? I mean, and it's the soundest form of money we've ever had. It can't be printed. I mean, it's got to go up. It's hard to know the rate, but people on the power law. I'll tell you, you can. But if you look at it, looking backwards, on a log basis, it's the R squared on it is 97%. And anybody who's had statistics class knows that if you've got a 97%, fit on a curve with a model, that's not a bad model.
Well,
So
for the power law, I've watched many explainer videos from Fred Krueger and the gentleman that sort of popularized it. I forget his name.
Anastasia, yeah, 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 yeah.
Yes, yes. And still, could you explain it for like the grandmas out there or for somebody who's never heard of it? What is the power law and why do people hold
I'll
this?
try the best I can. Yeah. So what it is these guys looked. I mean, Bitcoin. We have Bitcoin prices going back 16 years now, right? And so you can see this curve at which the price of Bitcoin increased from, pennies to where it is today. And what they've done is it's a mathematical model where they've looked at time and price on log scales. I think it's like a log power of 4 on each side. I'm not sure of that, but they would explain it to you. And using that log scale, you're able to predict, you can look at where it's been. And what I said earlier is true. They fit the numbers against that model with a 97% correlation. And so then you can draw it out in the future and you can just say, okay, well, if that's what happened in the past 16 years, here's what the next 16 years look like using the same model. And that's how I derive those numbers. Now, let me say something that I think is very important to say. All models are useful until they're broken, and most models ultimately do break. And I think this model will break to the upside because I think what will happen is at some point in time we will have hyper Bitcoinization. And that goes back to what we were talking about earlier, this Gresham's law issue. At some point in time, everyone's going to realize that the dollar is failing and they need to own Bitcoin. And at that point in time, it's going to go up a lot faster and more aggressively than the model predicts. And so the model is going to be broken to the upside. Now, I can't say when that's going to happen. I mean, my estimate for I mean, and what I'm talking about really is almost kind of the failure of fiat currency. And I do believe it will fail. But I kind of mark that as probably in the 2030 to 2035 timeframe, which is 5 to 10 years away, and it's going to take a lot of policy mistakes to do it, because if they do some things right, they can prevent it from happening. But it's hard to say. I mean, all of us are really guessing. Nobody can really tell you what's going to happen. But as I say in the book, I mean, as long as adoption continues, and as long, the two things I always viewed as the biggest risk in this is technically, is it going to keep working? Is there some technical flaw here that I don't understand because it's computer based, blah, blah, blah. I'm now quite convinced that it's technically going to keep working. And I'll tell you, in 2013, I wasn't convinced of that at all. And in fact, I would sit with core developers. They would tell me they weren't even convinced of it. So, I mean, people who were working on it said, well, it's an experiment, right? So technically, does it keep working? And then does adoption and usage grow? And we're seeing that. I mean, we're seeing, just little things, but steady, Steak and Shake's now taking Bitcoin. We now have an ETF. We've now got the guy who runs the largest asset manager in the world, Larry Fink, saying he believes in it. I mean, it's just slowly but surely more and more people are getting it. And so very much like, a lot of other things, and their adoption curves, once we're about to enter, in my view, the steeper part of the curve where, it's going to, more and more people are going to adopt it, and that's going to cause the price to go up faster.
Well,
Perhaps, yeah, go ahead.
it's for those reasons, Bitcoin today versus 2013, that Bitcoin back then was an asymmetric bet. Bitcoin's
Yeah.
still an asymmetric bet, but it's much safer, yet still the most asymmetric bet out there,
I
which is
think that's
crazy.
right. I think it is the most asymmetric bet out there. And one of the things I love about it, I mean, I made my career as a professional investor trying to find companies and bet on companies. And I can tell you that what's hard about doing that is that companies are run by people and people make mistakes. And one of the things that's really beautiful about this as an investment is that it's a mathematical algorithm that just kind of keeps ticking along. It really doesn't depend on a management team. Not entirely true because you've got core developers around the edges, playing around with stuff. But because everyone's got to vote on changes and we're pretty well down the road, I think the risk of a problem arising with it are pretty low. And I just love the fact that it's got this asymmetry, and yet there's no management team to mess it up. You know,
Stablecoin bill is being talked about, will probably be passed this week, if
That's,
not next. What are your thoughts on that?
I think it's a really good thing. Look, buying a stable coin isn't any different than buying fiat, right? I mean, you're because it's denominated in dollars. The dollar loses purchasing power. Your stable coin loses purchasing power. But what it does is it brings a lot more people, a lot of altcoin people, and a lot of other people into the tent, and it allows people to be thinking about crypto rails as ways of making payment. And that's a really good thing because, right now, I mean, the existing payment system is antiquated. It's based on Swift, it's bank to bank, and, it's got all kinds of problems. And there's no way in the digital world we live in, we shouldn't be suffering through this antiquated system. To have, stable coins and stable coin payments makes complete and total sense. So I get all that. The other thing is actually from a U.S. government point of view, and and by the way, I'm sure that Trump and Bessent and others know this and are aware, are focused on this. You know, stablecoin companies, Tether, etc., are, some of the largest, if not, well, they're one of the largest purchasers of treasury bills because they take cash in, they use that cash to buy treasury bills, they issue a stablecoin that's supported by the treasury bills. And so in a government that needs continual, treasury bill issuance, to see the value of Bitcoin grow and to see stablecoin use grow, that actually helps them. They actually want to have that happen. Now, what they don't realize kind of in the back door is that eventually the dollar is kind of we're attacking the dollar, but we don't have to tell them that. We can just we can just say, hey, look, we're going to help you we're going to buy some of your debt. Don't you want to support us? Yeah, okay, great. And I suspect that's how they got it through Congress. So, on balance, it's all good because I think that to get more and more people aware and into the microcosm or the system of, electronic payments, that's a good thing.
Larry Lepard, thank you so much for joining me. Links for all your stuff down below. I want to
Oh,
have you
thanks.
back in 6, 8 months, revisit some of these things.
Whenever you like. And I just want to tell everybody I'll be at Las Vegas. I don't know if this will be out before then. I'll also be at Prague, and I'm happy to sign books at both of those.
I'll be there too. Come say hi. I'll be coming to say hi to Larry. But final thoughts for the Altcoin Daily Army.
Well, I would just say, don't sell your Bitcoin and get off. If you don't have any Bitcoin, get off of zero. I mean, to me, this is an opportunity that your grandkids will, remember, and don't mess it up. I mean, it's really it's a very unique and rare time that we live in. You're not too late. 109 is not too much to pay. When the coins are 1 million or 5 million, you'll feel like you were a genius that you bought it at 100. So, uh, you know, get your coins. Buy whatever you can afford to buy.
And actually, one more question. There's this
Yeah.
clip. There's this clip of you doing an interview from Kitco, I think, that I've shared with so many of my
Oh,
trad
really?
friends. Do you know which one I'm talking about?
I don't know. Refresh me. There are a bunch of them out there, so I don't know
It
which one.
and maybe you said this on multiple podcasts, but it was essentially people don't understand the scarcity, and Bitcoin's the only, if we want more gold, we'll mine more gold.
Yeah.
Bitcoin, you can't do that.
Yeah, I think that's really, let me reemphasize that point. And that's why this thing is so unique. I mean, so this is the best performing financial asset in the history of financial assets. Nothing else has ever done this. And so it's very hard. I mean, imagine the early 1900s, you didn't think people could fly. Suddenly you saw an airplane. You're like, what the hell? I mean, it's the same kind of thing. It's something really unique and different. Let me explain why. So every commodity in the world is responsive to price. Okay. In other words, the price of gold doubles, we'll mine more gold. The price of oil goes up, we'll drill more oil. The price of corn goes up, we'll plant more corn. You can and the supply will bring the price back down. Remember, here we got a commodity, all Bitcoins are interchangeable, where the supply is fixed. So if the price goes up, we don't get any more of it. The price just goes up. So, that's what makes it so incredibly unique. And I think so hard for many, many people and TradFi people to get their head around. Do you know what I mean? And that's why those of us who really understand it deeply, just are pounding the table that you've got to buy some of this because it's going to be so much higher and you're going to have enormous regret. I mean, if you're looking at it 109,000 right now, and in 5 or 10 years it's at 2 million and you knew about it, but you didn't buy it, you're going to experience regret. Now, I'm not saying you got to take your entire net worth and buy it. No, 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 no. But you got to, I always just try and say, get off of zero. Take a 1% allocation, take a 5% allocation, and then forget about it. That's the other great thing about it, compared to companies where you got to read the reports and listen to management talk about it. You can buy this stuff, forget about it, go live your life. You wake up in 5 years, you're going to be richer. You know? So,
I love it. Larry Lepard, thank you so much.
yeah, thank you.
Appreciate you.
Look forward to seeing you in Vegas.